Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 21st, 2025, and we're diving into the fiscal third quarter earnings report of Hovnanian Enterprises, a leading national home builder. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hovnanian Enterprises has been a significant player in the home building industry, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Hovnanian Enterprises reported total revenues of $800.6 million for the third quarter, marking a 10.8% increase year over year. However, net income saw a significant drop to $16.6 million from $72.9 million in the same quarter last year. John, what are your thoughts on these figures?
While the revenue growth is impressive, the decline in net income is notable. This drop is largely due to increased costs and a lower gross margin percentage. However, it's worth mentioning that their adjusted EBITDA of $77.1 million was above the guidance range, indicating strong operational performance despite the challenges.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.51, but the actual EPS came in at $1.99. This is quite a miss. What does this tell us about the company's current financial health?
The miss on EPS expectations suggests that the company is facing more significant headwinds than anticipated. Factors such as increased land charges and interest expenses have likely contributed to this shortfall. It's a signal that while revenue is growing, profitability is being squeezed.
Operational efficiencies and future outlook. Despite the challenges, Hovnanian has managed to keep its SG&A expenses relatively stable at $90.8 million, which is 11.3% of total revenues. They've also reported liquidity of $277.9 million, which is above their target range. How does this position them for future growth?
Maintaining stable SG&A expenses and having strong liquidity are positive signs. The fact that 86% of their lots are optioned, the highest percentage ever, shows a strategic focus on flexibility and risk management. This positions them well to capitalize on future growth opportunities as market conditions improve.
CEO's perspective and strategic initiatives. CEO Ara K. Hovnanian mentioned that the company met or exceeded all guidance metrics despite a challenging market environment. What strategic initiatives are they focusing on to navigate these challenges?
The CEO highlighted their focus on pursuing growth opportunities while improving their capital structure. They're addressing affordability challenges with increased incentives and aligning their starts with sales. This strategic approach aims to sustain returns and leverage long-term demographic trends in housing demand.
Key takeaways. In summary, Hovnanian Enterprises has shown strong revenue growth but faced challenges in profitability, missing EPS expectations. Their liquidity position is robust, and they are strategically focused on growth and improving their capital structure. John, what are your final thoughts on their investment prospects?
While the EPS miss is concerning, the company's strategic initiatives and strong liquidity provide a solid foundation for future growth. Investors should keep an eye on how they navigate market challenges and capitalize on growth opportunities. Overall, Hovnanian remains a company with potential, especially if market conditions stabilize.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hovnanian's performance in the comments below.